Hey guys, I want to do a quick update on Apple. This is a daily chart, and why I'm doing this update is because we are at an extreme high here at 250. The indicator is peaking, blue bars come in. Okay, so I know a lot of people are long this stock, thinking 300, 500, whatever they think. I would be very cautious here if you're long. I mean, we're still above the moving average. The symmetry, the trend, everything is still up. I'm not saying short it here, but what I am saying is NQs are very close to the upper level. Um, Same thing with the price line. We're getting very extended up here. There's a blue bar right here, kind of hard to see on the video probably, but our rule, okay, is just quickly looking at this chart. Here's our long signal, which is the second set of greens. Okay, so what happens is we missed the first set of greens. Now, this isn't the first set. I mean, the first set was really far back here. But quickly, I'll kind of go over this chart. Blue bars, when the indicator's low, okay, that means bigger than normal move is about to start. Okay, so price was around 70. So that was saying big move is starting. Okay, so as we go through this, here's kind of an example. We have a move up, and as we're retracing the move, okay, because the market's either expanding or contracting, impulsing, retracing, okay, so especially on a daily chart, these are swing trades. We use options for them as well to keep the money we're putting into at risk very limited. So what happens is when the price is retracing, okay, because we want to buy on the pullback, the question is which bar do we buy? And most traders, they buy too soon in anticipation of trying to predict the move. Okay, so over time, if you're trying to predict it, you're going to lose, okay, because you can't predict consistently. So instead of the price coming down and we maybe this is the low, we have a bar here. Even though we might have a bar that opens and closes higher, the bar will stay red. Okay, one day does not matter. Just because it opened or closed higher than it opened means nothing. That's just it's one day in the whole realm of months and weeks and years. It doesn't really matter. So what we do instead of trying to predict the bar, we just let it play out. If it's red, we are not long. Okay, if you shorted, you know it's counter trend because the last move was up. Okay, impulse up. Now we're correcting, retracing. Okay, so if you're trading a correction, it's counter trend. So number one, you need to trade less shares or contracts on the futures, and there's a set of rules to trade counter trend that are not the same rules as trading with the trend. Okay, so as the price comes down, we don't care where it turns. It could come a little bit lower, it could have turned a little bit higher. It's irrelevant. Okay, what we're waiting for is the second set of green. So as soon as this bar is green, we're in long, and our stop is below here. Okay, it's not all the way down here where everyone is taught. That's too much risk. Okay, having too much risk, you're going to want to hold the trade longer, okay, to make the risk reward make sense. And we can't alter the trade for it to make sense. We just have to trade the chart. Okay, so if here is our long signal, we have defined targets that we go over in the course. But the point is, let's say we had a target at 280. Okay, instead of just letting the trade wander in hopes that it hits 280, we don't want to hope anything. Okay, we want to control and manage. Meaning, we have a three-step or a three-stop method. If it closes below the moving average, we're out. It has to close below. Okay, or if we get a blue bar before the target, we trail the stop to the blue bar, taking us out. Now it gapped down, so but we would have been out right here. So if we would have went long here at 210 and we get stopped at 255, somewhere 260, that's the trade, okay? So it's a dynamic way of doing it. If this happens, we do this. If this does not happen, we do not do this. It's very calculated, simplistic. We do it every time the same way. Okay, so let's go back to Apple real quick. And so we had going all the way back here, we had just a huge amount of buy signals. Buy here, 89, rides up, blue bars, trail the stop to the low of the blue bar. We would have been taken out right here. That's the high bar of this move. Okay, look for a pullback, look for a retracement. Once it retraces, turns green, there is our signal. Our stop is here, not here, okay? Too much risk. Stop is here, and we have the targets already defined, knowing there's minor waves, okay, within the bigger wave. So there's going to be minor buy signals within the major buy signal. We have another one here, another one here, another one here. Okay, so I can go on and on, here, here, okay? So the last long signal was 202 long, okay? So as we ride this up, price does not close below the moving average, so we're still in. Now, if let's say our target's 260, okay, it wasn't, but let's say it was, blue bars. So there is a method right there that we automatically know what to do, which is move our stop to the low of the blue bar. We would have been taken out the next day right here. Okay, we're never going to get the top ever, and if we do, we're lucky. So if we can't do it consistently, don't do it at all. It's a bad habit. So we exit here. Okay, if the price does go a little bit higher, we don't care because it's not going to go much higher, and we don't want to enter here in hopes it goes a little bit higher when the entry was here to here. That's the trade. Okay, so we want to do it the same every time. So the point of the video is not only showing you the blue bars, a little bit on the entry signal, but just know where we're at right now is the only time we've had daily blue bars at this new extended high, at this all-time high. Okay, so be very careful with longs on anything you're trading. Okay, I look at Goldman and Apple along with the futures to give me odds. Now, we do have the 1235 level on the ES. Even though Friday was a down day, okay, on the ES, we're still contained in bullish symmetry. So don't get caught up trying to short this right here just on a 1 day, 2 day event. Okay, symmetry is still up on the daily, even though we pulled back. We know it's not going to go straight up, it's going to pull back. Okay, we're still looking for the 1235. We had that level from last year March low. Okay, and we've been going long up to it. Now once we get to it, we have to redo our thinking, okay, but we're not there yet. And 60-minute chart is what we're really looking at, okay? Even though we're day trading, this 60-minute chart is our bigger day trading view. 60, 10, 3. 3 views, bigger, medium, short for our day trading. We only want to trade 310 in the direction of the pattern of the 60. In the next video, I'll go over more of the signals, using other things. If you want me to make specific videos, just email me and we can do videos on whatever you guys would like to see. Forex, whatever. If you guys want to do some option stuff, we can do that as well. So anyways, I just want to alert you to that Apple blue bar high, and so watch that 1200 level tomorrow, and if we can close above 1200, chances are we're going to 1235. So if you're heavily short right here, be very careful because we might have one more short squeeze up. See you guys in the next video.